global financial market is structured in three segments. We have the capital market, the money market, and the currency market and trading. So let me make you understand how this thing works. The capital market, which of course has to do with trading on stocks and shares, whether you're buying the shares from primary market or secondary market, and typically the capital market is a long-term investment. That's why you see people buying shares and stock and holding it for 5 to 10 years before they can make reasonable return on their investments. So capital market is not a short-term market. It's for long-term players. It's for people who want to invest for the long term. Usually, the return on capital market is not fixed because shares always vary. I remember my experience buying share from Great Nigeria PLC about 26 years ago at 1 naira per share. I can remember about 16 years ago, I checked Great Nigeria PLC and it was still 1 naira per share. And I checked about 5 years ago, it was still 1 naira per share. So you see, investing in the capital market does not guarantee your capital as well as your return. I've long forgot about that share. That's a loss for me. So that's how the global capital market work. But at the same time, I know people who bought into Microsoft share, Tesla's, Google, a couple of years ago, and they've made over 100% return on their investment. So you see, that's how the capital market works. So at the other hand, you have the money market. What makes the money market different is that in the money market, your principal is guaranteed and you have a fixed return at the end of the month. And you can have opportunity to invest into treasury bill and some other commercial papers with the bank, and they'll give you a fixed return. I think presently the return is around 18 to 20% per annual. But you see, the problem with money market is that as at last week or within this month, the inflation rate has been evolving within 18 and 20%. So that's a bad news. So if the inflation rate is 18% and your return per annual is going to be around 18%, it means that you've actually not made money. And that's one big problem that most Nigeria does not understand. So just because you keep money in the bank does not mean that it's safe. Just because you invest does not mean that you make profits. You also need to look at the inflation rates. So the inflation is a very major factor to consider with the money market. But there are strategies people use to make profits with the money market. But that's not something to be covered in this topic today. The third one is the currency market, which is the most popular market that is traded today. Currency, we are talking about cryptocurrency, euro, US dollars, Great Britain pounds, and people just speculating these currencies online like sports or future trading. This market is the most volatile market, but yet is the most profitable market because it has the potential of giving you up to 1,000 return per annual. And that's where a lot of traders abuse it. And this is the area I want to really dive in deeply. What is the ideal return that I should be expecting in the trading market? Because most people doesn't have a proposal for the ideal return. So your proposal for your ideal return is to take an average return from a traditional business. Let's say I'm into cars, or I'm into real estate, or I'm into supply chain. Usually my return should be around 20 to 35% per annual, depending on the industry I'm operating. Except maybe I'm in a tech industry or e-commerce where it doesn't require so much cost for operation and startup. But typically, traditional business make around 20 to 25% per annum. So if you are into currency trading, I think you should be looking at within 60 to 100% per annum. So all of this can be worked out with strategy. One of the way we approach that is having database accounts where you can have some of the accounts focus on aggressive trading and some of the accounts conservative and some of the accounts on very low risk. But the point is that you should be able to manage your entire trading system to ensure you make above 35% per annum and not above 80% per annum. If you are making above 80% per annum, you might be gambling and you might not know. It may look fun and profitable at first, But in most cases, from my 20 years experience in the industry, we've seen people crash over a long time. So my advice for those who are into currency trading, you should understand that this is a whole ecosystem of financial markets and trading. It is not about currency trading market alone. There are money markets, there are capital markets. What is an average return people make on this market? What should be the average return you should make? And how should you invest into this market and diversify your portfolio? Now, three things you should pick from this knowledge. Number one, as a Nigeria, you are forced to invest. You have no choice, because if you don't invest, inflation is going to hit your money. Number two, decide your portfolio carefully. You can diversify, but you should have an investment goal and objective. Number three, consider your currency trading as a business and typically look at what a business person will be expecting to make as a return per annum. Because if you go for 1,000% or 2,000%, you cannot sustain that in the long run. I hope this training will help some of the financial market trader out there, most especially the forex and cryptocurrency trader. See you at my next video.